Welcome to TipTV Finance, where we're joined by Rajan, Dhall, who's a technical analysis guru at Ransquawk. How are you today, Rajan?
Good. Thanks for having me again.
Okay, well, let's have a look at the charts that you brought in before I collapse from man flu, as I have at the moment. Pound dollar rampant, probably the currency recovery of the year to date.
Yeah, I think I was talking to you last time. We were discussing the fact that it looked really low and value was good then. I mean, I did have some Fibonacci extension targets to the downside, but we were talking, I think, before May's address. And I did say fair value for this pair is slightly higher, even on the weekly chart, even at 132, something like that. Yeah. So, I mean, I expect this to continue the move. Obviously, we have GDP figures to contend with. Even if they do come slightly better than expected or whatnot, I do think we'll see a slight retracement because the velocity of this move is quite high. So I put in some support levels in there for you guys to have a look at and keep an eye on. But I'm kind of fully expecting that trend line, the internal trend line there, to be tested, and it does confluence with the resistance level above. So that's the level I'm looking at targeting on this one.
So around 128-ish, even if we go back down from there, we've got to go up first to that zone.
Yeah, I think it has to get closer to the value area. I think we're quite far away, but I believe a retracement will come in at one of these support levels, and that's when I'll be looking at the break higher. And if I am talking about where to have your risk reward, I think on the support level, the lower support level on that chart would be where I would kind of put a stop in, and then the targets up at the highs there.
Okay, let's go on to the next chart. The FTSE 100, and here a bit of a pullback, I suppose, going opposite to the strength in sterling.
Yes, so obviously everybody's been looking at this correlation between sterling and FTSE 100. We saw Nasdaq make fresh session highs, so we're seeing a lot of bullishness in equities. And this is obviously the daily chart, so you can see the candle is not as bullish as we're seeing in the US stocks, but then we've seen a lot of sterling strength. So if sterling does retrace how I've forecasted that it might, then I'm looking at upside here. So probably a bounce off that support level and a move back closer towards the highs.
Okay, right. We'll go on to the next market, which is dollar yen, and this is in play as we speak, I think, but very close to breaking that trend line.
Yep. So this is like the trend line on the downside is the one that I would look at for a break and entry. The 111.50 level, I've highlighted this level because if I was to take this trade, I would put the stops underneath that level for safety reasons. Yeah. But the interesting thing about this is, as we've seen the rise in the stocks in the US, I kind of don't think that it's gone up in line with it as much as it should have, because as stocks have been rising and yields have been rising in the US, normally we've seen the correlation with dollar yen doing the same. So it has moved up, but not as much as I would have liked it to. So we might see a delayed reaction. But again, I spoke to Moose last week, and I'm looking at the targets to the upside of that 118.29 level first, and maybe even a break if we see the rise in yields continue.
So basically a break of 114.60 on whatever basis you prefer. Could be the trigger for...
yeah, because then that gives you the higher than the 2-to-1 risk to reward on the trade, if that's what you're looking at doing, and just to obviously keep an eye on the stops being below that 111.50 level.
Okay, that looks reasonable. Any other markets that you think we should just keep an eye on? I mean, do you believe the Dow 20,000?
Everything in my mind's telling me no, that it's overvalued. But the thing is as we look at every time the waves break and we see a move higher, I'm looking at people compounding and coming in to go further and further. So I'm one who kind of believes that if the momentum's taking it that way, I'm not going to argue with price action. Price action telling us it's going up, and we're not seeing the volume data get thinner and thinner and thinner as it's moving down. I've actually seen quite high volume data coincide with the move. So I still think we've got a little bit of time left to push to highs. And then we've got to see how Trump plans out for the rest of the time. But obviously that's a binary, so we don't know.
On that note, Rajan, Dhall, technical analyst at Ransquawk, thank you very much for coming in today.
Thank you.